We've had very good operating and financial results in the first 6 months of 2016 as a result of the consistent implementation of the Quickening the Pace strategy that we started 3 years ago. That's come through with like-for-like revenues up 11%, and very pleasingly, one of our key performance indicators is visitor growth, which was up 7% in the period. We've continued in the first half of 2016 with our replication program, where we've held 3 new replications, but for the full year in 2016 we're planning to have 13, and that momentum continues into 2017, where we're planning to have 14. In addition, we announced at the time of our final results in March that we were looking to buy in certain minority interests in the group, and in the first 6 months we've bought in 30% of Life Media in Turkey that runs the major houseware show Zucex. Also, we've made a small bolt-on acquisition of PEP in the Philippines, which runs the largest food equipment show in the region. Tarsus has continued to perform strongly, even with the geopolitical uncertainty they have at the moment, really as a result of a number of things. Firstly, exhibitions, meeting face-to-face is still important. It's a sales channel. Customers need to meet to show new products, they need to go to new markets, they need to continue to grow their business. Also, we have focused on certain markets and certain geographies which are in transition, where there's underlying growth, and that underlying growth continues to drive the exhibitions.
The first half of 2016 was another strong financial performance for Tarsus. Now, it's the quietest half year of our 2-year cycle, but there are a number of positive trends coming through. We had good growth in our reported revenues for the period, up 11%, and our bookings for the full year are up 10%. Both of those figures are on a like-for-like basis at constant currencies. We're seeing that revenue growth flow through nicely into profits and earnings, which allows us to continue our dividend growth, up 8% to 2.7 pence for the half year. In terms of cash and net debt and the balance sheet, our working capital flows have a seasonal pattern, and we have a strong second half weighting this year on our cash inflows. This means that our net debt is at a peak level over a 2-year cycle, with gearing at 2 times net debt to EBITDA, below our covenanted levels of 3 times. We've seen a number of companies in the marketplace raising their gearing levels, but we're retaining a cautious approach to debt, and the board's gearing target remains in the 1.5 to 2 times range. So overall, a good set of results for the half year.
The Tarsus differentials are key in implementing the Tarsus strategy, which are that we've got a flat management structure, which means we can move fast. We like to work with entrepreneurs, which means we are flexible, but also we are very, very focused on the exhibition itself, where we focus on having the category killers, the strongest exhibition that services that particular market. The outlook for the full year 2016 for Tarsus is very positive. Our forward bookings are up 10%, and we're particularly pleased with the larger events, with Label Expo in Chicago in September particularly going very well. In terms of 2017, it's the return of our 2 big biennial events, Label Expo Europe and the Dubai Air Show, and both of those are tracking very strongly. In terms of the recent referendum for the EU, actually our Quickening the Pace strategy over the last 3 years has focused on moving us into dollar-based assets, so we are very, very limited exposure to the impact of Brexit.